Hi there. It's time to look at ZCash with the Wyckoff method, checking where it is at and where it's going to head to. And if you're new to my sessions, here are the three key takeaways you can expect from the session. Let's start with the weekly chart. Last week we talked about ZCash. We said probably it has reached the blind climax. So if you're new to the Wyckoff method, it's an early stage of the distribution cycle, right? Sometimes it's the mid stage, depending on how quickly the price retraces from the peak, okay? This climax, accompanied with what's following, is the automatic reaction, meaning after reaching the blind climax, there will be a natural price retracement, and subsequently there would be second tests. The reason I said would be because this may not always happen. It may show up in a way from the automatic reaction for a little rebound. You can call it a weak second test. Sometimes it's just too low that you're going to suspect whether that's actually like a real test, and then it dies quickly downwards before it's got some other pumps along the way, or maybe even another climb later on if the environment really is boosting the sector or the particular project itself. So as of this moment, we're expecting to see an automatic reaction, not knowing how deep it is going to go. When we look across to the left, we see back in 2018, there's something very similar happened. But this time it went up way more quicker in much shorter time. Last time, from the very first leg upwards till the actual buying climax, it was about almost 300 days, almost a year. This time, from the first leg to where it was last week, it was only 49 days. Only 15% of the time compared to the cycle 7 years ago. Almost 8 years. Alright, here, the important thing I was trying to point out is, after the buying climax, look at what actually happened. The automatic reaction went so deep back to near, or actually the wick got back into the white line. What's the white line? That's the ceiling of the long-term playground zone. And the long-term playground zone tracks, you see how far it tracks back to 2016. 70-80% of the time, ZCash has been trading within this area. Only the crazy peaks or the initial launch, the price has gone outside of this zone. So the tendency of it returning to this zone is very high. And last time, remember I just said, the automatic reaction went so deep back into that level actually, just closes above it. That level currently sits at $318, or actually $316 roughly. 14, you can, roughly around that range. So basically half of where we are now. Alright, if you're trying to buy the dip, don't be surprised if it dropped by 50% before it bounced upwards. That's what happened over there. Okay, when it bounced, like I said, I don't even know whether I should call that a second test, because it was just too low that it was even lower than the intermediate pulse during the climb. Alright, so that's why I only take it as the last point of supply. So if this time it happens similar, that within this week or next, there's still 6 days and 5 hours left for this week. If it really comes back to where the white solid line is, that's going to be very crazy for people that got in at that high level. Whoever that FOMO in. It's a very risky move. That's the downside. Let's look at some upside, however. Okay, we have talked about the automatic reaction. Subsequently, there may be either one of these. Okay, a second test is a good news, but what's even better is that if ZCash for some reason is going against the market, or if the crypto market is getting really crazy by the time we get to the year end, and ZCash successfully stays at a level above this white line, there is a chance that it bounces and trades sideways and then eventually gets to a point that's higher than the buying climax. For that, we call it an upthrust. I'm just letting you know the possibilities. These are not certainties, because upthrust and even higher than upthrust and upthrust after distribution are something that may not always happen. So not every distribution cycle we would see these two stages. I'm just letting you know, if you're new to my sessions, that these guys can happen, but it's not a must. Alright? So like I said, it can happen like this, like a Space Mountain or Disney Castle, and immediately come back down from there. Alright? So that's the big picture. There's risk involved, very high risk involved, but not only downside, even like upside may be of a lower chance. There's still a chance that exists. So these stages, I haven't actually used them yet. I'm putting it here for later use, because there are just too many levels in between within the long-term playground zone. ZCash has a crazy scale. If we look at what happened right now, I just said it's more than double compared to the long-term playground zone. It's time to get to the daily and see whether we see some additional information. So the daily chart is exhibiting something pretty different. If we had the buying climax back in 7th of November, and this is a second test that we've just gone through just yesterday. Alright, now the price is coming down. What we call that is a potential sign of weakness. So meaning if it comes down to somewhere near the automatic reaction was, that we call a sign of weakness. Again, it can drop very sharply, that it doesn't even have this little pulse and bounce up for last point of supply. Okay, usually that's people, getting in, seeing, oh, it has dipped for 30%. It's time to get in. Okay, maybe people looking at the FIB charts and whatever other method they're using. It's good. They caught this bounce. Like I said, after the automatic reaction, there can be a second test, and this bounce is almost 60%. But for how many other subsequent tests there would be, we are not sure. Okay, up to the point that the whales or the composite man has distributed most of their stock in hand, then it's time for the distribution cycle to finish and comes back down to Earth, basically. Alright, so these are the stages that we would expect. In the daily chart, things happen a lot quicker. Alright? So, because it's at so high a level, it's not cutting any key levels and it hasn't exhibited any downward trend yet. But one thing we can use to track what I call the air hockey table, or you can call channel boxes, is that if we draw this table across, what it is indicating to us is the price tends to bounce between three lines: the ceiling, the bottom, and the center line. Currently, let me extend this a little. If it goes further up, we've got a bunch of candlesticks for reference at the bottom. Alright, but to the top, we've got only one reference so far. If it continues to climb within this channel, this retracement that comes down shouldn't drop to the same level as the automatic reaction at around $435, because this has been very steep. If it drops below 490, depending on which day it comes down, it can be 470 if it immediately comes down today. Okay, if it drops below 470, that may be a warning sign that this outlick may be over, or at least changing in terms of the rate of climb. So it can come down, bounces off from the white line. Like I said, in the weekly chart, if the automatic reaction drops to that point, there's still 4 hours for this week's candlestick for ZCash. So when that happens, this may become resistance, so this bottom edge. Even if it still continue to go up, it will be a new trend instead of the same trend box. Alright, so that's the implication of it. So let's see whether in the next couple of days, before our next session, ZCash will continue to trade along here. Even if it doesn't breach or broke or went above the previous highs, it can trade kind of sideways, heading towards this point, pointing towards mid-December. But then, if that really is a resistance that's been formed by the previous trading days over here, then by mid-December we will have an answer. Is it going to fall outside of this upward channel? Alright, but we'll come back to this, so there's no hurry. Let's see whether I've missed out anything. I think that's pretty intact. Sorry, when I said 4 hours, it was actually at today's candle, not this week's. This week's candle still have 6 days and 5 hours. Alright, so for the next 6 days, let's see how far this candle will drop. And that's where the automatic reaction will be for the automatic, weekly Wyckoff chart. Alright, thanks for joining me today.